Imagine waking up one day with no money worries, no panic about bills, no stress about job loss, no fear about the future, just pure financial peace. Sounds like a fantasy, right? Well, according to J.L. Collins and his revolutionary book, The Simple Path to Wealth, this life isn't reserved for trust fund babies or Wall Street wizards. It's available to anyone willing to follow a surprisingly straightforward roadmap. Collins introduces a concept he calls FU money. And no, that's not just a catchy phrase. It's the ultimate freedom fund. It's having enough money that you can walk away from a toxic boss, leave a soul-crushing job, or simply choose how you spend your time. It's power in its purest form. When you have FU money, you're not just surviving, you're in complete control of your destiny. But here's where most people get it wrong. They think wealth building is complicated, requiring advanced degrees in finance or insider knowledge. Collins destroys that myth with 4 simple words that form the foundation of everything. Destroy debt. That's it. Before you even think about investing, you need to eliminate debt completely. Why? Because debt is like a reverse investment. Every dollar you owe is a dollar working against you, making someone else rich while keeping you trapped. Think about it this way. If you're paying 18% interest on credit card debt while trying to earn 10% in the stock market, you're fighting a losing battle. It's like trying to fill a bucket with a massive hole in the bottom. Collins is crystal clear. Debt elimination isn't just step 1, it's the only step that matters until it's done. Once you've destroyed debt, Collins reveals what he calls the greatest wealth-building machine ever created, the stock market. Now, before you start thinking about picking individual stocks or timing the market, stop right there. Collins has a different approach, one that's both simpler and more powerful than anything Wall Street wants to sell you. His strategy? Buy broad market index funds and hold them forever. That's it. No complicated analysis, no trying to predict which company will be the next big thing, no stress about market timing. Just consistent, boring, incredibly effective investing in the entire market through index funds like VTSX in America or Nifty and Sensex index funds here in India. Here's why this approach works so brilliantly. When you buy an index fund, you're essentially buying a tiny piece of every major company in the market. You're betting on the entire economy's growth, not just one company's success. And historically, this approach has delivered around 10% average returns over the long term. Not every year. Some years you'll lose money, others you'll gain 30%. But over decades, the average holds remarkably steady. But here's where most investors sabotage themselves. Fees. Even a seemingly small 1% management fee can cost you literally crores over your lifetime. Why? Because of compounding. That 1% doesn't just disappear, it compounds against you year after year, decade after decade. Collins shows that choosing low-cost index funds over high-fee actively managed funds can mean the difference between a comfortable retirement and working until you die. Now, let's talk about the elephant in the room: market crashes. They're not just possible, they're inevitable. The market will crash. Not maybe, but definitely. And when it happens, Collins has 3 crucial rules. Do not panic. Do not sell. Do not look at your portfolio every day. Instead, view crashes as massive discount sales. As Warren Buffett famously said, be fearful when others are greedy, and greedy when others are fearful. This is where Collins' philosophy really shines. While everyone else is panicking and selling at the worst possible time, you're staying calm and maybe even buying more at discounted prices. It's not timing the market that creates wealth. It's time in the market. Every crash in history has been followed by recovery and new highs. Every single one. The power of starting early cannot be overstated. If you invest 1 lakh rupees at age 25, it can become over 6 lakhs by age 60. If you invest the same amount at age 40, it becomes only 6 to 8 lakhs. Why such a dramatic difference? Compound interest, Einstein's so-called eighth wonder of the world. Your money doesn't just grow, it grows on its growth, creating an exponential curve that becomes more powerful with each passing year. But Collins isn't just about accumulating money for its own sake. He has a profound insight about wealth's true purpose. The purpose of money is to give you control over your life. Real wealth isn't about buying expensive cars or designer clothes. It's about buying freedom. Freedom to choose your work, freedom to spend time with family, freedom to pursue your passions without worrying about paying rent. This brings us to Collins' most practical concept, the financial independence number. It's beautifully simple. 25 times your annual expenses. If you spend 6 lakhs per year, your FI number is 1.5 crores. Why 25 times? Because of the 4% rule. If you can safely withdraw 4% of your investments annually, you can live off your wealth forever without touching the principal. Let's say you reach that 1.5 crore target. 4% of that is 6 lakhs, exactly your annual expenses. You're now financially independent. You can retire, start that business you've always dreamed about, or simply work because you want to, not because you have to. The stress, the fear, the sleepless nights about money, all gone. Collins emphasizes that wealth grows quietly, silently, slowly, and then all at once. For years, it might feel like you're making no progress. Your account balance seems to crawl upward painfully slowly. But compound interest is working its magic behind the scenes, and suddenly, seemingly overnight, your wealth explodes upward. The path itself is deceptively simple. Spend less than you earn, invest the difference in broad market index funds, avoid debt like the plague, and stay the course no matter what the market does. But Collins warns that staying on this path is hard. Not because the strategy is complicated, but because everything around you will try to pull you off course. Financial advisors will try to sell you complex products with high fees. Friends will brag about their latest stock picks. The media will scream about market crashes and recoveries. Your own emotions will tell you to sell when markets are down and buy when they're high. Resisting all of this noise requires incredible discipline and patience. But here's the beautiful truth Collins reveals. Simplicity wins. While others are chasing the latest investment fad or trying to time the market, you're quietly building wealth through the most boring, most effective strategy ever discovered. You're not trying to get rich quick. You're getting rich for sure. The simple path to wealth isn't just about money. It's about designing a life where you have control, where you can make decisions based on what's right for you rather than what pays the bills. It's about sleeping peacefully at night knowing that your future is secure. It's about the ultimate luxury in our modern world, the luxury of choice. Collins's message is ultimately one of hope and empowerment. Financial independence isn't reserved for the lucky few. It's available to anyone willing to live below their means, invest consistently, and stay patient while compound interest works its magic. The path is simple, but it's not easy. It requires saying no to immediate gratification in favor of long-term freedom. But for those who stay the course, the reward is nothing less than complete control over their lives. So whether you're 25 or 45, whether you're earning 3 lakhs a year or 30 lakhs, the path remains the same. Destroy debt, invest in broad market index funds, keep fees low, ignore market noise, and let time and compound interest build your wealth. It's not glamorous, it's not exciting, but it works. And in a world full of financial complexity and confusion, sometimes the simplest path is the most revolutionary of all.